And welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and it's the first place that we go to notify you of everything that's going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in Discord? And with all that intro out of the way, let's jump down to the desktop and take a look at what's been going on with BTC. Okay, so we're going to start here. And this is basically just a chart where I drop the thumbnails of the videos on, specifically the short-term price action, just so we can reflect on whether or not we've moved in the right direction or not. It holds me accountable to the things that I say on these videos, and I think it's a nice visual just to kind of represent what's been going on. So I'm going to draw another horizontal line just here, and apologies, guys. And I'll just draw a little arrow on here as well. Okay, so yesterday we were talking about a pump to the upside. $35,000 was specifically for the thumbnail. It's actually a little bit short of that, more around the kind of high 32s to 33s. We'll review where that progress is today. And obviously we have seen a bump to the upside since we put this video out. So we've gone up so far 2.82%. Ultimately, this is all short term. The macro view still remains pretty much the same, that we are still looking for a big corrective structure on our weekly and daily timeframes. The monthly has progressed far too quickly to the upside as well. So we do think that there's going to be a big pullback at a macro level, but on the smaller timeframes, things are looking pretty bullish at the moment, and we're going to reflect in on what that looks like. Okay, so just kind of following on from the videos that we've kind of done here, we were expecting the move to the $30,000. Then, of course, we're just looking for that little bit more to the upside here before we start to move on down. So we're going to check out a couple of things. We'll be taking a look at Elliott Wave theory, and we'll be taking a look at smart money concepts. So let's start with Elliott Wave theory. Now, Elliott Wave theory, a couple of days ago, we were targeting out $30,767 to $31,128. And that's this yellow box area just here. We can see that we are right inside that zone right now. Now, looking at this structure, or lack of a structure, it's hard to say whether or not this is overextending. So what we're going to have to do is we're going to have to jump down into a smaller time frame, smaller than our 1 hour chart here, and to see whether or not there is a impulsive structure happening inside this fifth wave movement that allows us to look at this thing as an extension going above and beyond our typical expectations. Our typical expectations being 30,767 to 31,128. Okay, so what we're going to do is we're going to start off by jumping down into a 15-minute, and we'll reflect on things just in here. So this actually looks pretty good. So we do have some interesting jumps right here. That's really interesting on that 15 minutes. So we can see here we have this very impulsive structure right there. So we're going to mark that to start with. Down here, we still don't really have good clarity on where that C wave had finished down at this low end and this initial surge upwards. So we're going to probably have to come down a little bit lower. So let's go into a 5-minute chart there. And still, it doesn't give us that clarity. So it doesn't look good down here on this low side. So it still could be diagonal ending. And let's go into a 1-minute chart just to really see what is going on down here at this low level. Yeah, I mean, on the 1-minute chart, we could argue there might be something right in there. Let's go ahead and just do this. Yeah, it's okay. So on the 1-minute chart, it looks like 5 waves. 1, 2, 3, 4, and 5 like that. Even though we kind of actually peaked up a little bit further and then a little bit further. It doesn't give me good grounds here to kind of think of this. It's probably irregular flat or irregular flat. Yeah, I think it's just corrective looking at that move. So let's come back to our hourly, okay, and we'll reflect on that that move over here. So let's bring this back down. So it does look like we're corrective here, but we do have that 5-wave structure. So actually come back to that 15-minute and take a look at this 5-wave structure right in here. Okay, it could be possible that we're doing a zigzag pattern, and then we're just going to finish off another 5. That gets us into a 3-wave structure at the end there. And let's actually just draw some trend lines on, because there's many different types of diagonal. And what we'd want to do is we'd want to ascertain whether or not we are in a ending diagonal, contracting diagonal, or maybe even an expanding diagonal. And it's kind of expanding, but it's not great. So probably is going to have to be marked up as an ending diagonal. So with an ending diagonal, what do we look for? We look for essentially 3 waves inside each section. So if we have a wave 1, for example, we then have a 3 wave into a wave 2. A wave 3 would basically be another 3 wave structure, which we could look at there. Then we have a correction, and then we have another 3 wave structure taking us up higher. Okay, now that means that we're not overextending. It means that we should fall within our normal parameters of 1.236 to 1.618 approximately. So up there. And so it does look like that's kind of what's going on. So let's go ahead and see if this fits. We have 3 waves right inside there. We would have 3 waves right inside there, ending in that 5 wave, and then up here we'll be looking for another 3 wave structure, and there's a couple of really small corrections just to the downside on all of those. So if I come and bring us back to an hourly now, we start to then see that we have this structure, this 5 wave structure. So it does mean that we're probably going to be pushing the higher area of the 31s to kind of bring that in, but there's nothing here to look at and think that we are going to be going in on a bigger extension to that 5th wave movement or anything like that. So it does look like we're about to kind of peak out up here. Now, when we take a look at our momentum, our oscillator here, we can see that the stochastic RSI is overbought on the weekly, daily, 8 hourly, not on the 4 hour yet, and it is just going up there onto the hourly. This basically means that we're running out of momentum to the upside, specifically around those larger time frames. On the 4 hour, we still got some room to grow. Okay, so when we take a look at that and we think, okay, we still have this room up here to push up a little bit more, we've got to come down, probably push up a little bit, which means a correction on the hourly, but a push upwards on the 4 hourly over the next kind of day or so. Over the weekend, could see big resets here, or we could see a big drop. Really hard to know. Like, weekends are low volume, as are usually driven just from retail. So essentially, I think over the weekend we might actually have a reset situation where we cool off and then maybe move upwards again. Be interesting to kind of see. Ultimately though, once we kind of finish this 5th wave movement, there's very little at this point to say that we have to push up higher. So if we reflect on this even further out, we can kind of see here that we are kind of, done at that point, which is our C wave, just a little bit higher than our C wave expectations, 30,289 to 30,988, but it's pretty much quite within those parameters. Now, as we come up into our smart money concepts, what do we see? Well, we can see again more fair value gaps being left behind. Gotta hate these things, but love them at the same time. These are basically created from imbalances in the order books. Basically, when a buy order is entered into the system, okay, let's say over here, okay, they're buying at the bottom. Someone's put a large buy order in at the bottom of this price action, which would be approximately around the 30,300, for example. Okay, and basically there's very little selling occurring in this range that they can't fill their order, so price jumps up to the higher ranges. But the problem that you have with this is if you're a large player who's trying to place a large order for Bitcoin, you want to be buying it down at the lower side, not at the higher side, right? And the fact that there's not enough liquidity inside this area, you get this imbalance in the order book, what is called a fair value gap, right? So price jumps from the low side to the upside as it tries to fill that order. That you typically find is that person, that institutional player, that smart money fund that was putting that large order in, they're not going to continue paying those higher prices. They don't want to be paying the higher prices. So they stop their buying, okay? They don't buy anymore. And as such, price naturally wants to gravitate back down and get this gap filled out, and liquidity returns back into this area here. When liquidity comes back into this range, then usually the institutional money or the smart money comes back in and takes the price back up again. Okay, and so when I take a look at this daily chart, for example, and we see all these fair value gaps that were left behind, it to me is very unusual activity. Someone who wanted to buy it at $20,000 is all of a sudden also paying $25,000. It's very strange. Normally, you don't see these stacking up like this. So we know that there's a little bit of manipulation occurring here where price is being pushed to the upside through lack of liquidity, lots of buying and not enough selling. Okay, and this is usually a recipe for disaster. Anyway, we'll talk more about the macros this afternoon. On our hourly chart, we can see that we also have a lot of these fair value gaps being stacked up. You can see them pretty much from our lows down here. And when the price loves to come back down to these fair value gaps, and that could be a big problem for the Bitcoin bulls when we start seeing that these fair value gaps are all the way down at the $15,000 level, and all that's been happening here is this continuation of this push to the upside. Price does love to come back and fill those gaps. It's not a guarantee, but it does like to normally do so. So here we see another weak high, so price can still push up higher. We see lots of buying pressure around these lows down here. We can see equilibrium is now aligned to our 200 EMA, and we have a strong low. So at the moment, everything is still looking pretty bullish on our hourly smart money concepts charts. But again, like I said, with Elliott wave theory, it's telling us that we are reaching those key levels. Now we have actually moved up close to the 1.382. So our normal expectations were here for this C wave. Yeah, and this was basically between 1 and 1.236. Now we're pushing up to the 1.382. This does change the structure a little bit. Okay, so we no longer really look at this as A, B, C. Instead, we start to think, okay, W, X, and Y. Okay, pushing past our 1.382 would basically allow us to then look at this thing slightly differently. Although we do not have zigzag patterns to necessarily support the idea at the moment. I'd have to check that, but W, X, Y, X, and Z, for example, that allows us to push up into that slightly higher range from an Elliott wave theory point of view. It's a little bit too soon to really know, but ultimately that's kind of one of the things that we should be thinking about. Let me just pop that one back in there for now, as we kind of approach this kind of 1.382 area on the fib levels. Ultimately, though, we have those internal counts from an Elliott wave theory point of view indicating that this actually is likely to be the end of our structure. And reversal is likely to occur. But for now, we can still expect a small push to the upside. Now, our major areas of interest are up here a little bit further. 32,000, in fact, I've got two lines on there. 32,917 specifically is a really key area for us, and something that I do think is something that we want to be paying attention to. That's going to be an interesting resistance line. If we do need to push up any higher, or the institutional smart funds wants to push up higher, then 32,917 is going to be that interesting zone to keep an eye on. Ultimately, I think we won't necessarily get there, but it's definitely been a impulsive market at times, and driven from a lot of FOMO from retail, and we see continued selling pressure from smart funds. So essentially, although price is being pushed up here or kind of being kept buoyant, it doesn't look overly too promising on the kind of bigger picture, in my opinion. Let me know what your thoughts are in the comments below. Do you align to my kind of opinion on what I think is going on in the charts, or do you think we're in a bull market? Shut up, Nick. You don't know what you're talking about. Let me know in the comments below. Really interested to get everyone's thoughts and opinions on that. And if you did find this useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not subscribe, tapping the bell, selecting all the notifications. Join us down in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All other videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.